Hi, I'm Andrew Roach. Today I'm going to walk through an exercise taking several reporting periods of trial balances to produce the three financial statements: the income statement, the balance sheet, and a statement of cash flows. And I'll do it in a way that will dynamically update as new reporting periods are added. So let's get to it. We have two trial balance tables and we'll convert them to structured data tables. And that will allow us to easily reference them and create an array that combines the two tables. So we'll simply use curly brackets and reference the two table names here, and that will combine the two trial balances. After converting the consolidated trial balance table to a structured data table, I'm going to define the structure of the financial statements that I'm going to produce, and then create a mapping that links the accounts of the trial balance to the structure of the financial statements that I just defined. And then I'll apply that mapping to my consolidated trial balance table. Now I need to identify the items of the financial statements that need to be calculated separately. So we'll put these in a new tab to do the calculation and then start adding the components that will be used to do the calculation for each item. We'll start by adding the accounting period that we want to summarize, and then calculate the sum of these elements in a way that will dynamically expand as new accounting periods are added. And it's always good practice to validate the results of a formula, and here we can see it is working as intended. Moving on to the next calculation, I'll just copy my formula and validate my references. Then of course I'll do a spot check to make sure that it's working as intended. Once again, we'll copy the formula and we'll adjust it so that we're subtracting cost of sales from revenue. We'll validate our results and then repeat the process by copying and pasting and adjusting the formula as necessary. I have an entry for net income which has the prefix of 11 because it's the last entry for the income statement. But I also want it to appear first on the cash flow statement. So I need to create a new mapping entry, and I'll add the prefix 01. Similarly, I want a separate mapping entry for depreciation to show up on the cash flow statement. The formulas for the change in current assets, current liabilities, and working capital will require several sum-if statements, each of which are somewhat complex. So in order to simplify and make the overarching expression more transparent, I'm going to use the let function. This allows me to name and define each variable that I want to use. The first is defining current assets using a familiar sum-if statement. Then I want to define the current assets from the prior period to calculate the change. To do this, I will modify the sum-if statement to start a row before where the data starts, in this case A6. Of course, there is no change to calculate for the first period of data, so later we'll build in a check to return 0 for the change for the first period. I'm also going to back out cash from this calculation and short-term debt from the change in current liabilities, although including cash and short-term debt are also common variants in measuring working capital. Lastly, let's build in our check so that the first period returns 0 since there isn't a prior period from which to calculate a change. And then let's spot check it to make sure this formula is working as intended. I can copy that same formula over to my liabilities and simply update my variable names and the associated references, as well as my formula that I'm constructing. We'll add the change in current assets and change in current liabilities to get our total changes to working capital. We'll add that to net income and depreciation to get our total operating activities. For investing activities, we'll use the familiar sum-if statement that we've used before to calculate the change in periods. And in this case, the only argument we have is for property, plant, and equipment. For financing activities, there are three variables that will need to calculate the change from the prior period, for a total of 6 variables that we'll need to define. So this expression will greatly benefit from using the let expression, which we'll use in a similar fashion as before. And for net cash flow, we'll just add up our operating, investing, and financing activities. In the next video, we'll bring it all together to create dynamically updating financial statements with the addition of trial balances from subsequent reporting periods. Thanks for watching.